What's going on, believers? It's your boy Rebalance back with another weekly review and outlook for you. I actually want to pull up the economic calendar really quick. As always, we know this is not financial advice, just education and entertainment based on my experience in these markets. Now, last week was a little bit of a hot week. We had this event right here, the federal funds rate. They did increase the interest rate 25 basis points or a quarter of a percent from 5% to 5.25%. So that was just one of the main focuses of past week. But we also had other high and medium impact news that hit the marketplace that brought volatility with it. So in addition to that, it was the beginning of a new month. As you can see, Monday was May 1st. So we'll, look at a lot of those things from that perspective. But the highlight is going to be Wednesday, right, at 1 p.m. Central Standard Time. So right now is a little bit after 5:22 Central Standard Time. Market just opened up about 30 minutes ago. And just gonna, like I said, get you guys this weekly review and outlook. But this upcoming week, what we have on the horizon. So Wednesday is our first medium or high impact news on the dollar. And we see that at 7:30 a.m. Central Standard Time, we have CPI, 10-year bond auction in the afternoon. Thursday, PPI, 7:30 a.m. Central Standard Time, as well as unemployment claims. We got an FOMC member speaking, 30-year bond auction in the afternoon. And then on Friday, we have some other things revolving around inflation at 9 a.m. Central Standard Time. So should be a pretty decent week of volatility coming up as well. Now getting to the charts. What I have up here is the dollar chart. On the left, daily. On the right, weekly. So just bringing attention over here to the weekly first. I want to take note of so this week was of interest. Close inside of this week, right? And so the high and the low were going to be areas that had a lot of liquidity resting there. So the week before last, we take out that week's low, but we close inside the body. Failed to take out the high. We'll see when I bring the daily chart back out, we left relatively equal highs on the daily. We took those relatively equal highs out last week and closed all the way down here into that monthly level, right? That monthly inefficiency where we've continued to bounce for a while now, you see? So what I'm looking at now, and when I do pull that back up, and so now it's better time than any, is this sell side down here. Just like we had relatively equal highs up on the daily, now we got relatively equal lows down here on the daily. So my outlook for the dollar, keeping it short and simple, is for price to reach this sell side. We are still predominantly bearish. Nothing in the price action from last week was convincing to me that we were ready to reverse course and trade higher. I also want to note that the level that it did trade to and that brought all of that volatility to the downside, but not taking out this swing low here on the daily, was once it traded above those relatively equal highs, it traded to the midpoint of this up close candle here. Opening price I've been having denoted as the opening of my bearish order block on a daily. So we also got a body above there as far as the open, traded above the equal highs, traded into that consequent encroachment of that order block, and then rejected very aggressively, I'd say, because we closed all the way down on the March low, opened up with a gap, leaving the volume imbalance on the daily, and then we did consolidate to end the week, but still showing weakness more so than strength. And if there were levels as far as where I'm anticipating it to trade up to before, right, it runs for this liquidity, looking at this brown level as an area of interest, just given what is shown here right now. But now I'll kind of shift this to where I put on the left the hourly, and over here I'll put the daily. So we just have a little reference for both. And you know how I do it. Got my weeks mapped out, right? With the vertical lines. That yellow horizontal line is going to represent the weekly open, right? So week opened inside of this hourly inefficiency. And I was mentioning that if price was able to find support here, that would be what could lead to it running those equal highs on the daily, right? And it's pretty much what happened. Price rallied from the inefficiency to the March low, repriced down to the weekly opening, and then rallied again from there into and above the opening price of the daily bearish order block. We consolidate going into the end of the day on Monday, open up on Tuesday for Tuesday's trading. Basically, all of this, in my opinion, is just consolidation, right? But a pullback here before rallying again, finally taking out those equal highs on the daily, and then eventually rejecting the consequent encroachment of that daily bearish order block and rejecting lower. This was the end of Tuesday's trading, so we're going to Wednesday here, gap lower, back into that hourly inefficiency below the weekly opening price, using this area of that H1 inefficiency as an inversion level now. So it was using it as support. Now it's finding it was acting as resistance now, sending price lower. So we trade lower. Again, we failed to take out that swing low over here. And then basically, in my opinion, is just using that H1 inefficiency as well as the weekly opening price as resistance to end the week in the consolidation. And so that was the review of the dollar, and I've already given an outlook. Like I said, if anything, while it is so far, you can see bullish, my black candles are my bullish candles. I would be anticipating no further than getting to this brown level here before we are able to get down to the sell side. But again, there's news and things like that coming out, so that should also provide for good opportunity within those time windows for the market to, engineer and then run for liquidity. But now, getting back to how I had it before, so we'll put the daily back here, put the weekly back over here, and I want to go to the S&P chart and just want to do a little quick, breeze through the indices real quick, and gold, and then we'll call this video a day. I'll try to keep this one short and simple. So here, Monday's trading, we traded above the buy side here, which was the short-term target I had for S&P. Reached that on Monday, reject, and then pretty much we're bearish every day except for Friday off the close. But if you're paying attention to the tails and wicks, there was a lot of volatility, a lot of opportunity as far as, for example, here on Tuesday, it traded down into a potential bullish order block on a daily. It did reject higher from that, so that was a solid trade, but having to be nimble and securing profits along the way would have been necessary to have considered this a good trade. Otherwise, it did come back down and wipe the stops off from any body who took that trade from this level, and we're using the low of that day as a stop loss, potentially wanting higher prices, possibly taking out this swing high. We eventually, of course, as you can see here, we break through that opening price of the bullish order block, but we are sitting about that halfway point off the close. But then we open with a gap lower, and we take out this low, but we're inside of this daily inefficiency. as well as that old high from the federal funds rate that was announced back in March on the 22nd, Wednesday. So from inside of here, Friday, rally, basically closing in a lot of the gap as far as the down move that was happening so far for the week. We closed in a lot of that range on Friday, trading back higher. Looking at here on the weekly, right? Not really, again, showing any convincing signs of the market being bearish. So my outlook for S&P is this brown line. If it gets above there and it can act as support, this brown line, and then of course this high here. So there's going to be the three levels that I'm looking for on the upside on S&P. Bringing it down to the hourly real quick so that we can, right, just go through the week real quick. So Sunday, this is the opening price from last week. We basically consolidate before we punch up above that buy side Monday morning. Reject back below weekly opening price. It acts as resistance. Since price lower, we break right through this inefficiency here. But this isn't supply and demand, so we do cut through candles with important zones and levels. So once they take out this sell side and tap that daily bullish order block, trades right back up into that level. See, it's been inverted now. Look at the bodies of the candles. They all stay within that range. Although this is that FOMC, right, federal funds rate release. So we get, well, actually, this was the hour. Yeah, this was the hour of it, that 1 o'clock p.m. Central Standard Time. So look at that candle, like barely anybody, huge wick, huge tail. And then the following hour, we begin to seek more sell side. So we're back into that daily bullish order block. Then we run out this swing low here. And then going into Thursday's trading, open lower with a gap, retrace back into this area inefficiency, if you can see that. Then one more time lower into that daily inefficiency, which we've, found support at to end the week. Going into Friday, we were able to rally back above this old sell side here. And so outlook for S&P, which I just said was higher prices, but I would be interested to see there's this inefficiency here. So will it be repriced down here before going higher? Or potentially back down to this old area of sell side, because we traded below it aggressively twice, traded back above it aggressively. There was an inefficiency here, which it traded back into, and then it created this inefficiency here. So this could be a breakaway gap, but the week just started. So it's going to give us some time going into London session, see if it maybe wants to revisit this area, can potentially take a trade in here, targeting those higher levels, which I mentioned. Now, just bringing back up the daily and switching over to NASDAQ. So over here on NASDAQ, the daily chart. So similar, very similar story here. Monday, we trade above the buy side. We reject lower, take out sell side, right? We don't take out a swing low though over here, but we do fill in this whole inefficiency. And then we'll trade it right back up. Basically, NASDAQ had the smallest as far as the body on the weekly. This was the body of the weekly candle. So the wick and the tail were both, larger than the whole body of the candle. So volatile week, but not convincing as far as any, change of state of delivery to bearishness. In my opinion, still bullish. So last week I was mentioning this buy side, and then this level up here. So those are going to be essentially the three levels I'm looking at on NASDAQ: 13,348 3/4, 13,546 3/4, and if it wants to get crazy, 13,687 3/4. Just to get an hourly perspective. So opened up here early Monday, we tag that buy side, we reject lower. One more time above it that afternoon. So big consolidation, but very choppy, right? Back down. So we made a lower high, but a higher low. Back up to that weekly opening price. Then back down again Tuesday morning. Trade through this sell side here, through this H1 inefficiency, and then we found support in this H1 inefficiency. Rally from there, beginning of retracement, found support at the initial one, right? Choppy, but we're rallying. Almost reached back up to the weekly opening price with that federal funds rate release. Close lower, runs lower, takes out sell side. Back again, right, into that initial H1 efficiency just below the sell side. We do tag the sell side again, acts as resistance, runs one more low. Very choppy, consolidating, find support on that old February high. And then we reprice back above the weekly opening price back to that buy side to end the week. Dow Jones, daily chart, same thing. Monday, run the buy side, reject lower. I was watching this level. This is a bullish order block here. We did get a nice trade between Tuesday and Wednesday here, but eventually we did close below it, close inside that daily inefficiency, and then rally to end the week on Friday, back above that midpoint of the bullish order block here. Levels I'm watching on Dow Jones higher. This brown line 33861. The high of this candle, of course, we have an inefficiency between these candles on the daily. And then this level, but of course, there's opening price here, the high here, then this level, right? Then the old buy side, then this high here. So still plenty of, range. That's about 600 points or so from where it's at now, more than enough. But if it does want to get a little bit, crazy, that 34821 buy side up here, or even the midpoint of that wick, so about 34700 or so, almost within that range, will be upside targets for Dow Jones. Looking at from the hourly real quick. So the yellow line is kind of hidden behind the behind the brown, but you can see the prices are exactly the same. So, the weekly opening price basically consolidate underneath it. This was the latest to take the buy side. It happened later Monday morning. We consolidate on it, reject, run out the lows, consolidate, London session, Judas swing higher, run lower, take out sell side, trade to that midpoint of that daily bullish order block, back up to that old sell side, back up to that March high. We're very close to it here, but consolidation, we do trade above it with the federal funds rate being released. At that level acts as resistance. We reject lower, take out that low. Inside of that daily inefficiency, rally back up to that midpoint, use it as an inversion level, acted as resistance. One more time lower, taking out another low for the week. And then we begin what could have been another deep retracement before another leg lower, but ultimately consolidates. Going into Friday morning, we push higher, take out these highs, back above that midpoint, right at that daily bullish order block. Acts as support now, so it inverted it again, and then traded back above that old sell side. We did close below it, and now you see for the first hour so far of this week, we did open up just 1 point above that level. And so, like I said, bullish indices, bearish on the dollar for this week. On the gold, So gold, I want to pull up the monthly over here real quick, actually. So gold finally traded above the dealing range. Now I was saying that the monthly potentially was showing weakness, potentially, but with this push higher here to start the month and a rejection lower, I'm not trading the monthly chart. Remember, I'm just using it as aid in my analysis, but we did also trade above not only April's high of this year, we trade above April's high from last year as well. We did reject, but we are currently above the monthly rejection block, which is the opening price of this up close candle. So bullish gold as well. Obviously, just going to be looking for those same levels that we've already traded above but rejected. So first level will be March high, right? Second level will be April's high. And then, of course, that buy side from, April of 2022's high. So all of those levels are candidates for upside objectives. Although with a week like that, I would not be surprised if gold consolidated. If you look here, the bodies of the candles on the weekly are very tight. But this also could be one of those weeks where if the dollar does get aggressively lower and breaks out of its consolidation, we could see, right, this leave a close up here rather than continuing to close below that March high, right? Now over here on the daily, so this was Monday's trade-in, was within all of this consolidation. Tuesday broke above all of the swing highs up in here. Wednesday we trade lower before rallying again. Open with a gap between Wednesday and Thursday. Trade lower, pushed above April of this year's high as well as April of last year's high, all on Thursday. But we rejected up there, closed inside of that range. And then we saw a nice dip lower on Friday to end the week. So kind of opposite of indices, to be honest. But if gold is going to find support anywhere, first level I'm looking at the brown line. Second is a monthly rejection block from March 2022. And then this old low as well. So those three levels would be levels of defense, barring it from going lower. But there is sell side resting below all of these lows. These are all relatively equal lows. So it could also trade down here without giving any sort of confirmation below this red line here. I could still use that like a rejection from below here as a catalyst, like it's reaching for and engaging the sell stops below here, pairing that with buy orders to see the market higher for profit taking. But getting to the hourly chart, just to wrap this up. So we got Sunday here, open price, we trade lower. No, we had already taken out this low. So now this low is where that sell side is resting below all of these lows at 1982. But trade lower, reprice back up to that monthly rejection block, acted as resistance, one more time lower, now taking out this low from Monday. Consolidate going into Tuesday morning. We rally above that monthly rejection block, taking out this high. Consolidate above. Run the sell stops below all of these lows. Rally right above that March high, found support. And then open with a gap higher going to Thursday, all within this 1 hour. We took out April 2023's high as well as April 2022's high and went above, colored outside the line, but rejected quickly, traded lower, back higher, basically retesting, right? April 2023's high, consolidate, and then run sell stops below all of these lows and trade into this inefficiency and back below the monthly rejection block to end the week, but bounced higher. So again, looking at it from this perspective, on the hourly, right, that March high April high. And then about the midpoint of this wick is still that April 2022 high. So that's pretty much going to wrap this video up. I am feeling more confident about getting into doing a live streams in the mornings when I actually am, looking at the charts on the smaller time frames and using a lot of the tools and concepts that I've been exposed to. The one thing is though, it can be complicated until simplified. And so I'm like proactively learning new things that I'm still applying and back testing, forward testing, gathering more intel on. And I want to be able to then take all of those concepts and ideas, simplify them, and then use them in real time to show how powerful they really are once they're fully understood and used in a logical way. So that'll be it. Shout out to the believers. Thanks for tuning in. Like, comment, subscribe. I'll catch y'all in the next one. Peace.